And welcome to our reporting season spotlight, your shortcut to the results that matter. I'm Nadine Blaney. Well, JB Hi-Fi CEO Terry Smart says the group remains cautious due to uncertainty in the retail market and heightened competitor activity. It comes as the group reports a net profit after tax up 8% in the first half of FY25. Shareholders will receive an interim dividend of $1.70. That's up by close to 8% on the previous corresponding period. So JB Hi-Fi says that January sales were up 7.4% compared to the previous year, pushed higher by the group's performance in New Zealand in particular. Car Group has reported a 9% increase in first half earnings of $292 million. Net profit is up 5% on the PCP, with revenue hitting $548 million, up 12% on the previous corresponding period. It's pointing to expansion in Brazil and South Korea, as well as a strong media strategy. Car Group also declaring a 50% franked interim dividend of 38.5 cents. That's up 12% from the PCP, but the result did come in slightly below expectations. Ansell says that plans are in place to offset tariff increases through pricing, with limited cost impact expected in the second half of this year. However, Ansell says the situation remains dynamic. Its half-year earnings showed earnings of $127 million, up close to 21% on the previous corresponding period. FY25 adjusted EPS guidance has been increased close to 34%. Ansell expects inflation in costs of manufacturing, labor, and higher ocean freight rates in the second half of this year. It also notes solid healthcare demand and the strengthening US dollar as potential tailwinds. However, it is expecting sales growth to slow. Pilbara Minerals expects to swing to an underlying loss for the first half as it transitions one of its two processing plants into care and maintenance in light of the steep drop in lithium prices. Pilbara expects underlying net loss after tax for the half to come in between $5 and $7 million. That's after reporting an underlying profit of $273 million last year. Turning to broker moves, and Citi is rating Domino's as neutral, saying the share price reaction to Domino's pre-release of its first half results were in line with expectations, and saying that that lift was a short squeeze, as it is the fourth most shorted stock on the ASX. So Citi says that the 205 store closures will save about $16 million annually from FY26. Macquarie is also raising its price target to $35.10, driven equally by higher earnings forecast and a lift in the assumed terminal growth rate. Morgan Stanley has a target price of $40 on Domino's. Taking a look at what we'll be reporting tomorrow, we'll be hearing from CSL, Seven Group, Charter Hall, Breville, and Region. Let's look at today's results.